You're watching Stock Watch this week with me, Ntaoleng Lechela. And joining me to unpack your stock-related questions today via Zoom is Kearabilwe Nonyana from PRIMEXBT and Cobus Potgieter from Southern Cross Capital. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag StockWatch. Gents, thanks so much for joining us this afternoon. Now, we had a bumper global earnings week, and I think some of the good news was overshadowed by the sell-off, right? From the tech sell-off to the sell-off in Bitcoin to commodities easing. Let's start with the tech route. Is the tech route over-exaggerated, or are we approaching, I guess, a period of normalization, and perhaps maybe this is time to pick up some of those tech counters, Gia?
Yeah, I mean, I was looking at the software index, and I'm thinking, the likes of Palantir and Microsoft haven't been beaten down on the week, and I think they're getting to levels where they're now starting to look quite affordable. But I think right now there's a bit of normalcy entering the market, and I think this week was one of those liquidity events, because I have not liked the fact that the red flag indicators, such as the precious metals, have kind of had a regression of more than one towards risk assets. And for me, that is a market out of kilter. And this week, I mean, even with the sell-off, I think I've been more comfortable with red than I've ever been in my career.
What about you, Cobus? Are we just approaching a period of normalization here? Nothing to worry too much about.
Is anything normal? In 2025, 2026.
I blame it on Trump. I blame it on Trump.
I do. Okay, so we had excellent results from Google, but unprecedented AI spend spooks the market. Amazon, disappointing results, unprecedented AI spend spooks the market, and a new narrative that has arisen, and something that has been discussed before. We've all tried these LLM models, and we've seen their shortcomings as well as their incredible abilities, depending on which tasks we put before them. But one of the major tasks that they seem to be really, really good at is programming and software development, so much so that the so-called vibe-coded software universe is expanding rapidly, where people are using these models to develop programs without any programming backgrounds or skill sets. And that's part of the spook that we are seeing. Okay. Are these tech companies cannibalizing their own business, developing these models that ultimately will replace the software as a service model that they have been pursuing so actively? So that's a very interesting sort of hypothesis that the market seems to be grappling with. I agree. I don't think the party's over. This is probably an opportunity to take a bite, but it's really interesting that, the possibility that these companies are ultimately investing so heavily in something that will cannibalize their own businesses and might not replace that revenue, that's something the market needs to consider.
Yeah, I mean, we've been dealing with a lot of speculative trade this week, just watching some of the news that has come out. And earlier, I was chatting to another analyst, and we're discussing, these big AI spending bills. And she mentioned something quite interesting. She said that we're dealing with different businesses. We're dealing with businesses that are in a transition phase. We were so used to these tech counters not spending as much capital that now that they are, it's eating in, or rather, it's just changing the narrative behind them. Let's just get your sense around that and the kind of businesses these tech companies are evolving into, Cobus.
Yeah, that's precisely, I think, what we are grappling with. And a lot of this, to be fair, happens in the private space. And something that excites me, scares me, excites me about SpaceX, X coming back to market, including XAI.
Yeah.
It seems we're going to have a raft of AI type listings in the coming 12 months. And then we'll see whether or not the public markets are as enthusiastic as the private markets about all of this that you describe. And absolutely, we have these enormous tech companies that are leveraging profitable, sustainable, attractive businesses, Google, Meta, Microsoft. Generating enormous capital and then spending all of this in in the AI space for a payoff which is difficult to understand. And do the same people that develop these amazing products have the skill set to anticipate how this is going to, how the world is going to change? They seem to think they have an understanding. They seem to be pursuing AGI. It's difficult to see where the value will be created. I see where the value will be created for the end user, absolutely. I'm just not convinced that the owners of the IP will end up making enormous amounts of money. I think AI might become so commoditized that these investments effectively have to be amortized,
Yeah.
it then might not become enormous paydays. And that's something to consider when you take all of this exposure.
Yeah, and let's get your take around that. Are these companies going to reap the rewards, or will we see certain companies be leaders and others laggards?
I think it's a more philosophical question for me than it is an economic one. And what I mean by that is that there's shareholderism, which essentially goes and searches for profits right now, and then you on the other hand you find. You find also civilization, where I think the AI is very important for civilization, but is it going to be value accretive for shareholders? And I can just take an example in terms of the margin compression of Microsoft, in terms of if indeed spend some of the AI spend on some of their Azure business and their cloud business, there was an opportunity to expand margins in those businesses. And I think that's what the market is grappling with.
Okay.
Are we willing to, or are we willing to not look at short-term profits for long-term gains? But at the end of the day, too much of these businesses future order books rely so much on AI, and it's mind-boggling at the moment.
All right, let's shift focus to the banking sector, bringing it back home. An observation from a viewer here noting that Standard Bank increased its stake in Investec following picking up an almost 6% stake in Nedbank. Gia, the rationale behind that?
Yeah, one thing we always have to take into account is that Standard Bank Group is a big white group, and it has asset management businesses as well. I mean, it has Melville Douglas within for high net worth individuals, it has Stanlib within. So I
Yeah.
mean, they do have significant investments on the JSE that they hold as custodians for their clients. So I mean, I think the rationale, apart from these banks being attractively very cheap, and as well as looking for sector rotation into the broader financial services space, Investec is also is a good dividend payer, and has lagged the other banks over the past 12 months, as well as Nedbank has not been a good value accretive investment for if you're holding the bank index in totality. So my rationale for this is that they have investment management businesses within the stable, and they just essentially upping their stakes in valuable parts of the market.
All right, let's get your take on that, Cobus. I was thinking perhaps even a deeper regional exposure to Kenya, right? Because it did make a bid for CBA, the bid that Nedbank won.
Yeah, so no, purely because if
They're
Standard
so
Bank
big.
management,
They are
no,
big enough.
if Standard Bank management start buying up Nedbank shares
Yeah.
because of that strategic call, the Reserve Bank and the Minister of Finance would be on the phone immediately. I suspect this is not Standard Bank making purchases. This is as already alluded to, the underlying asset managers.
Okay.
And then more specifically, where we get less visibility around is Prime. So how Prime works is hedge funds typically, but other institutional investors that can invest via gearing, buy shares via swap. So I go into the market, we run hedge funds, so we literally do this, right? I want Nedbank exposure. Maybe I'm going long Nedbank, short Standard Bank.
Okay.
So I take the Standard Bank balance sheet and I purchase Nedbank and I sell Standard Bank, and they write me a swap. And that way, I can get geared exposure. I can post 10 million rand and get 30 million rands worth of exposure via the bank. They will lend me the difference, and they will hold it on their balance sheet. And so essentially what is occurring is there's a lot of activity from probably offshore hedge funds. So Standard Bank has substantial exposure in that space. And out of interest, I think it moves around so quickly because some of these banks are doing quant-driven trade, absorbing liquidity, getting out of these things very quickly. Sorry, these hedge funds, these so-called low latency hedge funds, to which Standard Bank is offering a lot to offshore hedge funds. That these things change rapidly. And Nedbank have actually retracted that SENS announcement from earlier because I suspect it looked like it was above 5% and then it went back below 5%. And sometimes the settlement takes a bit of time, and by the time you put out that announcement, the information has already changed. And that doesn't indicate strategic buying from Standard Bank. It indicates some underlying client doing something more interesting.
All right, interesting. You know what? You learn something new every day. Cobus, let's take a look at the JSE. A question here, are you seeing value in a counter like JSE? And they've also added AfriMat in the mix. Very different businesses there.
Yes, I like both for different reasons. Focusing on the JSE, and we'll have this conversation when we get to stock picks again, but the old adage of in a gold rush, sell shovels. So that's one option, but another strange beneficiary of the enormous rally in precious metals and the incredible activity we have seen in the precious metal space. And I don't know why, but for whatever reason, these precious metal stocks, they already had betas of 2 and 3, and now that they are more valuable, they seem to have betas of 6 and 7. They trade enormous volumes, they swing around up and down. Who's the massive beneficiary of all of this volume? It's the JSE. Which other market in the world gives you equivalent access to high quality precious metals? Nothing. Absolutely nothing. Australia has a few names, but as a percentage of the whole, as a percentage of the top 40 where most of the volume sits, that's enormous. That's an enormous proportion. And the JSE, we're sort of sitting between results at the moment. But I suspect off the back of that, and I like the new CEO, I like the fact that they're pursuing new products. I like the fact that my sense is getting clogged up by all of these new structured notes and ETFs, actively managed ETFs that they are listing and bringing to market to try and expand the universe. So that narrative of all of the delistings hurting the JSE over time, that's still sort of ongoing, but the new volume introduced by the surge in precious metals and the pursuit of these new products, that's very positive, very good for the JSE and quite a nice windfall.
All right. Yeah, picking up from where Cobus left off, we're talking about the JSE being a beneficiary of, the rally we've seen in precious metals prices, likely to gain because of those higher trading levels. Take me through your analysis of the JSE.
I'm just going to go back to just doing comparative volumes of this time of the year to just now. And we have volumes almost doubling since that average volume is almost doubling. I think last year in January, we're doing about 14 billion per day. I think when I last looked at the statistics, as at the 31st of January, we're closer to 30 billion per day.
Wow.
Which really just tells you how much of volume was actually moving through the JSE. But I think what's also quite interesting is the foreign buying. There's so many SENS announcements of BlackRock increasing their stakes in platinum stocks and gold stocks. And as Cobus said, where else can you find such high quality precious metal counters but the JSE, which is where we're seeing capital flows flow into our market, and it's really done well even for the rand. So as you see, right now my favorite trade is just looking at the gold price at 6 o'clock in the morning and anticipating where the JSE is going to open and taking a position on the SA40 futures.
All right, talking about that. Talking about the JSE in particular, and perhaps let's look at some of the SA Inc. counters. This here has been dubbed the return of SA Inc., right? And it just doesn't seem like that's really coming through. Looking at what's been playing out with the retailers in particular, all the trading statements that have come out have been quite disappointing, I think, except Pepco. But you look at Mr. Price, you look at the grocers, Boxer, ShopRite, missing expectations. When are we going to see the return there, Gia?
I think one thing I always look at breadth factor, and what I mean is the amount of sectors on the JSE top 40 which are actually showing gains. And right now I did a breadth factor analysis yesterday. really it's precious metals. So gold miners, the platinum stocks, which are in overbought territory. The rest are just probably just over just sitting at neutral or oversold. And I think it speaks to the prospects of these two different companies, or the two different sectors. I mean, recently, just looking at trading statements out of the precious metal companies, I mean, I just saw one gold company saying that their all-in sustaining costs is sitting between a range of 1,200 and 1,300. And if we had to be honest, if the price of gold is sitting at 5,000,
Yeah.
I mean, just think about how cash flush they're going to be. But I think it also just gives you a bit of a sleepless nights because of how much of these precious metals make up in terms of the index. I mean, right now it's sitting at almost a third, and hence why I told you that trade in the morning is a good trade every morning because of the fact that we know of the over concentration of the JC within those two different momentum sectors.
Let's bring it back to you then, Cobus, and maybe let's touch on the retailers, right? I mentioned there that some of the trading, well, most of the trading statements we got out, whether it's a clothing retailer, whether it's a grocer, whether it's something like Clicks as well, you know, one that you'd peg as a defensive player in the sector. Those numbers were not looking good. Is it a more structural reason here? Are we dealing with, you know, a consumer that's cash conscious, a consumer that's perhaps, you know, looking to a cash conscious consumer, a low growth environment? What's going on there? Because we've been speaking about sentiment improving, but that not really trickling down into, I guess, the growth figures and the money that you and I are, you know, getting.
Interestingly, something like the NAMSA numbers are looking quite robust. Consumer confidence seems to be improving. We've seen all the bank economists upgrade their GDP growth expectations. And frankly, I mean, these buoyant numbers, I mean, I love that, you know, 1,300 USD all-in sustaining cost. You know, how profitable is that? Guess what? A good percentage of that gets converted into corporate tax, flows into the fiscus. That means the tax burden is unlikely to become worse to the average consumer. Take the strong rand and the call it the disinflation we import through that. That means we are likely to get below the 3% inflation target. Lower rates equals again more robust consumer outlook. Sometimes I think these things just take time.
Okay.
I might mention a small sideshow on the side of call it the scourge of online betting and gambling, which seems to be taking up a lot of the consumer's discretionary spend. As a percentage of the pie, and there isn't really significant exposure I can take to that market if I was so inclined. On the JSE as an example, all of that money really goes offshore. So that's unfortunate, from a South African investor's perspective, but also from a South African consumer's perspective.
Yeah.
But ultimately, I think things just take time. And I mean, Clicks, you mentioned Clicks. That was maybe more operational execution in the Western Cape that dented those numbers. But I agree. I have been disappointed by the results thus far. Maybe we just need a little bit more time.
Yeah. And just on consumer spending power, purchasing power, interestingly, I was speaking to someone from Deadbusters, and he said that consumers are even taking on loans to gamble. And I thought to myself, my goodness, what is happening? But just on mining, right? We heard from Glencore and Rio Tinto yesterday. Glencore, of course, walking away from the merger bid. What did you make of that, Gia? And does this make way for BHP to perhaps waltz in?
I think this was just a clashing of management at the end of the day, and for me it was just the clash of egos, which would have made quite a significant copper producer out of the two if they did merge. Because Rio Tinto wanted both the CEO and the chairman of the board position, and Glencore essentially. I think it was just a matter of could they offer more of a premium for that buyout in order to let Glencore's management kind of fade into the wind? Because I think it's all just a money play. But I do believe that it is time for corporate action into the consolidation of these copper players because of how important copper is into the fourth industrial revolution, to renewables, into AI as well. So I think right now that you may see a bid from BHP, but I think right now that there will be some time to settle because, I mean, these talks really did rile up the market.
Consolidation still seems to be the name of the game on that front. Do you expect BHP to waltz in, Cobus, or do you expect to start seeing maybe the big players picking up smaller copper players?
Well, that trend we have already been seeing. Yes, that trend will continue. And frankly, I think Glencore has been in play for a while. They seem to have, try to make it more presentable as a potential merger partner. Just as an aside, adding to what Kia said, that information being put out there, that one of the unacceptable conditions for a deal was Rio wanting both the chairmanship and the CEO position. How preposterous is that? The role of management and the board is to act in the best interest of shareholders.
Yeah.
And here you are openly, sort of calling a deal jeopardized based on essentially who gets to be the boss. That is brazen. And I mean, just to rant a little bit, I guess that just
said.
yes, but ego shouldn't be allowed to override good reason and good governance. And frankly, management and the board should not be so far removed from shareholders that they feel they can insist on these kinds of things. That is absolutely incredible. But in any case, I agree. If I were to, I don't engage in rumourage, but given that we've already seen Billiton sniffing around, and they might not be interested in the coal assets. We know that
That's how that played up in SA.
Yes, and we know that's part of why they like the Anglo story post simplification. But I agree. Like there seem to be moves to try and get to that copper powerhouse that you described.
All right.
So we certainly will see more of that.
Okay, let's get into your stock picks. Cobus, where do you see value at the moment?
Again, selling shovels in the gold rush. Omnia. Highly cyclical business operating in very, very interesting industries, mining, agriculture, and bulk chemicals, supplying chemicals, explosives, fertilizer into that market. Met the management team at the ABSA Corporate Summit. Great management team. I was quite impressed by this cyclical mid-cap. And I think another hopefully beneficiary of increasing marginal mining activity in South Africa. We're not seeing many massive new mines being sunk, but we are seeing existing resources being tapped very proactively by the players, where of course there's opportunity to sell both the PGMs and the golds at these very elevated levels, and there seems to be increasing activity. They're well exposed to that, well exposed to a pretty good agricultural environment. It looks like sub-Saharan Africa is having a better cycle, so to speak. And I like the way they are positioned in terms of technology as well.
Yeah.
They are pursuing this new cleaner explosive technology, which allows the shafts to be cleared quicker post explosives. And then on the agricultural side, they are pursuing bio, which is almost supplements for plants instead of the old traditional pure focus on fertilizer. So quite an interesting business and very, very keenly priced. Very, very attractive valuation.
All right. What about you, Kia? What are you hanging your hat on this afternoon?
Yeah, no, I'm doubling down on a trade that I made 2 weeks ago. Last time I was on Stockwatch, and I told you about the March 26 VIX future call options at strike price 21. They're in the money. So right now I'm doubling down and buying strike. I'm moving down my strike price to about 25 and buying some more options there because I think they're mispriced. So look for that trade to come alive when the implied volatility starts to gear up in the next couple of days, in my opinion.
Gents, thank you so much for your time and joining us on Stock Watch today. That was Kearabilwe Nonyana from PRIMEXBT and Cobus Potgieter from Southern Cross Capital. Do remember that Stock Watch pre-records on a Monday and Wednesday at 1 p.m. and is live at 6:30 p.m. on Tuesday and Thursday, while Stock Watch this week is live at 12:30 p.m. on Fridays. Keep that in mind and keep your questions coming. For now, that's all for Stock Watch this week, but do stay tuned for lots more coming up right here on Business Day TV.